Friends, welcome you all. Today's topic of discussion is about various types of insurance policies. So, in earlier classes, also we have at a very broad level we have discussed various types of insurance policies, and broadly we can divide them into two categories. Who can tell me what are the broad classification of insurance policies? And your syllabus also talks like that to broad classification.
So life insurance and non-life insurance.
Non-life insurance policy, life and non-life insurance policy. Non-life is also referred to as general insurance. So you can say life insurance policy and
General insurance.
general insurance policy. And there are various insurance companies there in our country. You see, some of them provide life insurance policies, some of them provide general insurance policies like this. Okay, we'll be learning about them. Now, let me share the screen with you. We'll see various types of policies. Okay, so life and general. So general means, let us say, fire insurance, marine insurance, auto insurance, etc. First, coming to what are these life insurance policies? So life insurance policy, all insurance policies are contracts. So it is a contract between the insurer and the insured. Insurer here means is the company who is providing the life insurance service. And insured means the subject matter person who has taken the policy. So it's a contract between these two people. So as per this contract, what happens at a life insurance policy? A compensation is to be paid. Right? The compensation is to be paid on the happening of death or disability of the person. So the life is covered, or you can say life risk is covered, or you can say more precisely the financial loss due to life. Right? That risk, the risk of incurring some loss due to loss of life is covered under this type of policy. Right? There are some life insurance policies which they give a kind of compensation after retirement or after a certain period of time. So that kind of policies are also there. So life insurance helps a person to secure his family against the financial insecurity in the event of death of the earning member. Then this contract, how it happens, the policy holders or the insured, they pay certain money, they pay some money to the insurance company or the insurer. The money which is paid is called as premium. And this premium can be paid in lump sum or can be paid in installment. Installments means periodically, maybe monthly, maybe quarterly, maybe annually, this premium can be paid. Right? Lump sum payment is also possible. So on receipt of this premium, the contract is entered into. And the insurance company promises that on the happening of certain event, and here the event is the death, then insurance company will compensate the insurer or the family members of the insurer. Okay, it's a promise. It's a promise to give some compensation to the family members of the insurer. So this kind of policy is very useful. It helps the family members, because if the earning member loses life, then maintaining family becomes a difficult task. That can be handled easily by taking a life insurance policy. Life insurance policy is in fact an unique kind of policy. Unique in the sense most of the life insurance policy has got two elements. One is the risk coverage. Risk is covered in case loss happens, then compensation will be paid. Second thing, what is there, it also includes an investment element in it. Investment element is that some returns are also paid. It depends on the type of insurance policy. It can be taken as insurance, taken as investment vehicle also. And there are some policies which are linked with mutual funds also. You might have heard of this thing. That is unique linked life insurance policy. It is linked to mutual fund units. So they are also a kind of. Now, keeping all these things in mind, so let us see various types of life insurance policy. First kind of policy is referred to as term insurance policy. When it is a term insurance policy, it is a pure insurance policy, meaning there is no investment component in it. It covers for a specific period. So the family gets the lump sum amount in case of death of the insured. But if the person doesn't die within that period, then no money is paid to the family. So in this kind of term insurance policy, premium payment is very less because there is no investment element in it. It covers only life. In case of loss of life during that period, compensation will be paid. If there is no loss of life, then no compensation is due. Okay, normally people take term insurance policy for high value, maybe around 1 crore, 2 crore like this. Premium amount is also small, but no return or compensation is paid only in case of loss of life. Is it clear to you what is term insurance?
Yes, sir.
Now, the next kind of policy is referred to as whole life policy. Whole life policy means it covers the entire life, not for a specific period. It covers the entire life. The family receives certain sum of money after death. They are also entitled to receive bonus. Most of the time they receive bonus. So they will be getting the compensation as well as they will be getting the bonus. But only after death because it covers for a lifetime. This is called as whole life policy. Right. One is term insurance policy of seen, that's a pure insurance, no investment element. Second is whole life policy. It covers the entire lifetime. Third kind of policy, the most popular policy you can say. You can call it as an endowment policy. Like a term policy, it is also valid for certain term. It is for a specific period, maybe 10 years, 20 years, or till the person attains a certain age for a particular period. And lump sum amount will be paid to the family in the event of death. If the person dies within that period, that amount will be paid. But unlike term plan, maturity proceeds will also be paid. Maturity proceeds shall be paid at the end of term. In case of pure term insurance, what happens? The term is over, the person still survives, then nothing will be paid. But here in endowment policy, when the policy matures, the maturity amount will be paid. If death happens, then death compensation will be paid. If the death doesn't happen, person survives, then the maturity amount will be paid. So I think you have understood these three kinds of policy: term policy, whole life policy, and endowment policy. Yes or no?
Yes, sir. Understood.
Okay, having understood this, now we'll move to some other type of policies. Now let us see. This is a policy which is called as the money back policy. Money back means the insurance company will give some money back. How it pay? A certain percentage of the sum assured will be paid periodically, right, throughout the term as survival benefit. If the person is surviving, certain percentage of sum assured will be paid periodically. Maybe once in 5 years, maybe once in 10 years, certain sum of money will be paid. And after expiry of the term, you get the balance amount at the maturity proceeds. So maturity proceeds will be received after expiry of the term. So certain payments periodically and some payments at the maturity. The family members gets the entire sum assured in case of death during policy period. If the insured dies, then entire sum assured will be paid. Okay, and this is regardless of the survival benefits payments made. Right, survival benefits which are paid periodically that will not be deducted from this sum assured. The sum assured will be paid, survival benefit paid. This policy is referred to as money back policy. Hope you have understood this money back policy. Next category of policy is unit linked insurance plans or ULIPs. So this is basically this policy has got two components. One is it's an investment tool. Secondly, it has life coverage also. Yeah, the part of the premium goes towards insurance coverage and the part of the premium goes towards investment. The investment part is invested in various types of insurance policies, in various types of units of mutual funds. It may be equity fund, it may be a debt fund, a balance fund like this. So it is invested in mutual fund. A lump sum amount will be paid to family in the event of death. If the person dies, since insurance coverage is there, lump sum payment will be paid. This is called unit linked insurance plan. Next plan is child plan. It provides, or you can say it ensures child's financial security on the event of the death of the person. A child gets lump sum. Child gets lump sum amount. The insurer pays premium after the death of the insured. Once the person dies, the premium is to be paid by the insured, and child will get the benefit. Child continues to get certain money to get a certain sum of money on specific intervals. Since it is for securing child's future on certain intervals, maybe at his age of 20 years, 25 years, 30 years, like this, child gets certain sum money. This is called as child plan. Similarly, there is a good plan for pension holders. So they can create a retirement fund by taking insurance policy. They can pay premium, and after the retirement age, they may receive money in the form of pension. One can get a regular pension, or one can get a pension in commuted form also. In case of death, the family member can claim the sum assured. This is about pension plan. So depending upon the need of the person, one can go for term insurance policy, or whole life policy, or endowment policy, or money back policy, or ULIPs, or child plan, or pension plan. These are the broad classification. But if you practically see to the website of any insurance company, there are so many companies in our country who are providing life insurance services. You can find out the names. You can also visit IRDA and find out who are the companies who are providing life insurance services. Now, once you go there, if you see their products, you can find n number of products. So many products are there. So one need to understand what is how the products are structured. Concept is same. Money has to be paid, premium has to be paid, and insurance company will pay some assured or investment, some assured or maturity value, depending upon the terms. So one need to understand these products. Then one need to decide which type of life insurance policy suits him. Right? Okay. So this is broadly, we have covered various types of life insurance policy. Having covered this, let us move to the next category, that is general insurance policy or non-life insurance. Now, general insurance contract offers financial compensation or any loss other than death. Death is not covered here. Apart from that, if there is some other reason for which financial loss is suffered, then general insurance policies can cover. It ensures almost everything. It may be, so if the person is expecting to face some financial loss relating to some assets, relating to some uncertain event, then he can get himself insured. Example are, let us say, house insurance, car insurance, bike insurance, health insurance, travel insurance, the professional indemnity insurance, like this. So many policies are there. So one can take these policies and protect himself against this kind of losses. In this kind of policy, what happens? The insurance company promises to pay a sum assured to cover up the loss, to cover up the financial loss. Financial loss can be covered, just some compensation paid by insurance company. Right. So general insurance offers financial protection for all your assets. It may be that loss may be due to damage, to theft, or maybe for some other reasons. So that can be protected. So these are major types of general insurances like health, motor, travel, home insurance, fire insurance. These are the major types. So first, let us see what is home insurance. Under this kind of policy, what happens? The insured secures his home against some financial loss. right? Loss may be damage in the home due to, let us say, earthquake, some lightning, so or due to theft, right? This one can safeguard his house against all this, right? It covers man-made as well as natural circumstances that may result in damage or loss. All these things can be covered. It's the typical nature of a home insurance. What is motor insurance? This is also popular. Most of us know this, that uh, under motor vehicle act also, there is one kind of insurance policy which is mandatory. Without insuring your vehicle, you cannot even bring the vehicle to the road. Right. That policy is referred to as the third party policy. So minimum, that is the minimum requirement whenever under motor vehicle act, if you are bringing a vehicle to road, you have to ensure that third party insurance is there. Right. So this motor insurance is available in two forms. One is third party insurance. Second is comprehensive policy. Comprehensive policy means if there is some loss, then it will be compensated. Loss may be due to accident. Loss may be due to theft. Loss may be due to injury to yourself. This loss is covered. So if comprehensive insurance policy is taken, then insurance company will compensate. But third party policy is that it will cover the damages to the third party due to your motor vehicle. So your motor vehicle has caused to damage to somebody's life or somebody's property, right? So that loss can be covered to third party insurance. So your loss will not be covered, your vehicle loss will not be covered, but your vehicle met with an accident with another person, right? Then whatever loss is there to the third party, that can be covered. Okay, when the vehicle is responsible for an accident, third party insurance take care of the harm caused to the third party. Okay, but you have to take care of yourself. Right, Motor Vehicle Act makes it mandatory for all motor vehicle owners to have a third-party insurance coverage. Right, so that will cover the third party damage to the third party, body injury, death, all these things can be covered. This is about motor insurance. It's a kind of general insurance. Travel insurance is one more popular insurance when mostly when one travel to foreign countries for international travel, and also for a simply train travel also, that option is available. If you book tickets online also, you can get yourself insured. Same is also available for flight travels. So this kind of insurance covers the loss of baggage, trip cancellation, delay in flight, travel insurance, and also covers health issues during the course of travel. It covers all these things. So this policies one can go for cashless hospitalization also. So this is again one more popular insurance. Health insurance is a kind of insurance which is gaining popularity day by day. So one needs to ensure his health. If one person's hospitalization expenses can be covered up through health insurance. Health insurance can be covered, can include, it can be a standalone policy for one person, or it can be a family floater policy also. Family floater means if some health issues happens to anyone in the family, that this one policy can take care of that. That is called as a family floater policy. Let us say policy is for 5 lakh rupees, 5 lakh the hospitalization cost can be covered in respect of any of the members of the family who are included in that floater health insurance policy. Or it can be standalone policy, only one person can cover. That's health insurance. Fire insurance, as you can understand from the name itself, if there is fire related loss related to similar kind of thing, then policy covers the damages which is suffered. That is called as fire insurance. These are three more kinds of general insurance we'll learn right now. But apart from these three basic types of then this type of basic general insurances, there are few more insurances like marine insurance. That is for ship's voyage insurance can be covered. Commercial general liability insurance. If someone is in commercial doing some commercial dealings, there might be some, is expecting some kind of loss that can be insured. Directors and officers insurance. Directors and officers assume various responsibilities of a company or an entity. So there is a possibility of some loss to them, loss to the company, or they may suffer some loss. They might have given some guarantee, personal guarantee like this. In this kind of situation, those loss can be covered by this type of insurance, directors and officers insurance. Cyber risk insurance. This is one more risk. So that risk can be covered. So because of something, cyber attacks, or let us say cyber fraud, if some loss is suffered, then cyber risk insurance can take care of this. Professional indemnity insurance. Professionals also sometimes they face financial loss, like let's say doctors, other people, finance professionals. Many times they do something, they take a risk, and for which they may incur some financial loss. To cover up that loss, this professional indemnity insurance can be taken. Group insurance is a typical form of insurance where the entire group, it is in fact a insurance for the group. So all the group members are a part of that insurance. If some loss happens to any person, the insurance company will compensate them. That is called the group insurance policy. Right. So these are various types of insurances we have seen in our day-to-day life. Have you come across any other insurance apart from this? There will be many more. Now here you please search and find out what are the other types of insurances which are available beyond this. What we discussed right now, these are basically very basic insurance policies. But that doesn't mean these are the only insurance policies. There might be many policies, many more policies beyond this. Okay. Now at this stage, I will tell you, or let me ask you one thing. Can you tell me, or can you give me examples of some companies who are providing life insurance policies? I want some examples. These are the companies who are providing life insurance policies. Please unmute and speak. Please unmute and speak.
Sir, Reliance Insurance.
Okay, Reliance Insurance. Then
HDFC Insurance, LIC Insurance.
okay, HDFC, LIC. Then okay, you find it out. This is an assignment to you. Now tell me some examples of the companies who provide general insurance, that is non-life insurances.
Tata AIG.
Okay, Tata AIG.
So IFCO Tokyo.
IFCO Tokyo. Okay. Give me at least one more name. So many companies are there.
Sir, Bajaj Alliance, Edelweiss.
Okay. Okay, Bajaj Alliance. So like this, yeah, at least also someone said, I think. Yeah, so there are many companies who are providing non-life insurance. Now, friends, you please look into have a look at their products. What kind of products they are offering, what are the various kinds of policies that are available. And accordingly, one can decide to choose what kind of product. So, in any business situation, otherwise also normal situation also. So, risk is there. And that risk to the extent can be managed. If it cannot be let us say eliminated, at least it can be managed with the help of this insurance policy. So this is broadly we covered various types of insurance policies. Now two more important concept about insurance we'll be covering. So let us keep it for our next session. One is about micro insurance, and the second one is reinsurance. Okay, and we'll be also covering the concept of IRP. So this micro insurance concept, reinsurance concept will be learning in your next session. Any query you have?
No, sir.
No? Okay, so we'll stop here. Next class we'll catch up with micro insurance and reinsurance. Okay, friends.
Okay, sir. Thank you.
Thank
Yes,
you.
sir.
Thank you.